Hi everyone, so welcome to Investing for Value. I couldn't help notice Bed Bath & Beyond was down quite a lot in the aftermarket, but let's look at where it closed today. Today it closed at 14.85 at 1.89 billion in valuation. Mind you, that 2005, this company was worth $9 billion. And then it just proceeded to just slide down from that 9 billion to less than 2 billion right now. So a lot of value has been destroyed if you're a holder of that stock. But what I think is starting to change is the new CEO who used to run Target and he did it really well. He's been in the job for 100 days and he's going to, in my opinion, I think he has a good chance of just slowly changing things around. And I think the brand is strong enough that it can still maintain, at least a small position in the market share. Possibly not a big one because Amazon's is really crushing everyone in that space. So it's dropped 25.5% in the aftermarket. Share price is around about $11.07, giving it a market value of $1.42 billion. In that in the scheme of things, where does this leave this company at right now? On the aftermarket drop, well, the dividends they were paying was 68 cents, so that kind of gives you around about a 6% dividend. If you're able to get around the $11 mark. So this is a company that has 900 million in cash, which is what kind of caught my eye as well. I was thinking, well, if this is a company that's trading at 1.4 billion but 900 million in the bank, that's really not bad. So you also have to consider if the money's actually going to be like no point having 900 million and if it just keeps on flowing outwards. So in terms of losses, the last 3 months was $38.5 million, and in the 9 month, adjusting for like minusing all the goodwill and impairments and all those things, they were losing about $107 million. So like they're probably going to lose around 140 odd million for the last 12 months, which is all right. Things could be worse. But I mean, they're kind of like turning things around. So if they're able to turn things around, the loss isn't too bad in the scheme of things. If you lose 140 million, but you've got 900 million in the bank, then that kind of represents a situation they can turn things around. So where does this put things? Like they do also have debt, so they have 900 million in cash, but they also have 1.5 billion in debt. But the debt is not too much to worry about because you got 300 million that's due in 2024, 300 million that's due in 2034, and you have 900 million due in 2044. So as long as you're able to meet the obligations of the interest rates, which looks like it's averaging closer to not 5% per annum, as long as they can manage their debt obligations, then the debt's not too much of a problem. The problem is trying to stem these losses. I think this current CEO can turn things around. Like the overall sales they're reporting dropped about 5%. So if it's dropped about 5%, and what was it? Yeah, and digital sales are actually growing by 20%. So I think if they can make the really good transition from physical stores to online sales, then this kind of keeps the company and the brand very much alive. Though we got to see, that we've got to make sure these losses aren't going out of control as well. So in terms of that, is this a good opportunity to buy or not? So in my opinion, anyway, like I don't say you want to buy at a very high valuation. I don't think you want to buy at $11 entirely. I think the minute it hits like around $10 or downwards, I think that represents a good opportunity to start buying, because just because like if something it's gonna if it drops another 10%, you're looking at about a $1.25 billion company holding 900 million in cash. And even if it goes on to lose a bit more money before things like start to be fixed, it still represents a pretty good opportunity because the company is flush with cash, and they've also they've been changing their strategy around. They've been selling their stores and then taking the cash, then leasing the stores. So that kind of gives them a bigger cash position. It kind of gives them more certainty around their portfolio in terms of how to manage their expenses. Um, which in that kind of in the scheme of things, it looks like a different type of strategy that I have seen with other retailers, and it has worked before. So I'll give them the benefit of the doubt currently, and I'd say like you want to buy at a margin of safety. Like obviously that 14.85 was nowhere close to a margin of safety, particularly not for retailer. Retailers are losing money left, right, and centre. But if they can change their strategy to online sales, then or just focus their stores in the more busier populations, yeah, I think these guys do have a chance. And I do like the CEO of Target. Yeah, like he used to be at Target, now he's at Bed Bath and Beyond. I did like what he's done in the past, so I think what he can do here is more. He can do more or less similar things because apart from the name, most things is pretty similar. They're selling very similar merchandise. So if this guy can do the same stuff with what he did at Target, and he can do it here, I think this company can represent a really good opportunity. I at the amount of value it's gone down by, I think it's got potentially some more room to go down. In terms of like if you're asking if $11 is a good buy, like I think if you really want to get in, buy a little bit, as I always like to recommend anyone that's really urgently wanted to get in. Like for me, I'm not really particularly that fussed about getting into this company yet. But maybe if it was about like $10, then I'd be quite interested. And if it ever came down even lower, then I might be a bit more interested. Dividend wise, giving you about 6%, but like you don't want to just like take a dividend and lose more in the share price. So my priority has always been the share price and where it can go higher at the current point. I don't want to buy a share price that just stagnates, and then you just receive the dividend, or the share price either drops even lower and the dividend doesn't even cover that. So like if you got a 68% dividend, but you bought this price, no way that dividend covers this drop. So you got to look at the math in these things and the fundamentals of the company. I think anything closer to the $1 billion mark is representing a very good buy. Though I'm not too sure the stock will drop that much lower. So if I say I think if it drops another 10%, it starts looking at like a pretty good opportunity to start looking at buying. Particularly with everyone that's really interested in dividends. Like I'm particularly not that interested in dividends, so for me it's about the share price. Though I know there's a lot of people that love their dividends, and they're probably wondering, is this a retailer that represents a good opportunity to invest for some good dividends? And I say, if you can get it at the right price, yes. And yeah, I think that's like in terms of what I was worried about. It was a debt and a declining situation. Currently, the debt isn't necessarily the biggest problem, and the declining situation in terms of store sales declining, I think that's something that we can assess in time and see how that goes. Obviously, things aren't looking great, but if you're just a $1.2 billion company, then you don't need large sales anymore. If you were a $9 billion company, you obviously needed a lot of sales. But now that they've shrunken by this much, to just steady a ship and focus on the current situation of this company. They do operate over 1,000 stores in the US and Canada, so they have a large market position. Particularly with a lot of retailers going out of business, they can look at it as a situation to consolidate and build out from there. And I mean, yeah, if they can build anywhere like Target, then they can potentially just come back and be a bit stronger and represent a lot of good value. Until then, good luck investing, everyone. Also, yeah, like if you've got an opinion, let me know about this company or any other companies you want to know about.